A very good afternoon, dear students. I hope you all are safe at your place. I, Professor Sonal Agrawal, welcome you all on the digital platform of Agrawal Vidya Vihar English Medium College. This is the lecture for the subject Indian Banking and Currency System. As you know, that in the last lecture we have completed our second chapter, that is the nationalized bank. Now onwards, we are going to start with the chapter number 3, that is the private bank. As you know that we have discussed so many times about the need of privatizations. Clear? Because in the second chapter we have learned about the nationalized bank, means we have learned about the public sector bank. In that we have discussed so many times about the limitations of the nationalized bank. Clear? So many limitations we have discussed in that chapter. Because of those limitations, the need arises about the privatization of the banks. Now, the question arises that what is mean by private bank or what is mean by privatization. So, the definition is written here. Just read the paragraph once. I hope it is done. Okay. Start with the definition. That the definition says that privatization means under the privatization the ownership, control and the regulation of the different sector of the economy is in the hand of the private sector or the private enterprise. Clear? So this is just the very simple meaning about the privatization. Starting three lines means privatization means the transfer of first thing ownership, control and regulations of this different sector, and here in this chapter we are talking about the banking sector only. Clear? Of the different sector of the economy is, should be transferred in the hand of any private sector or any private enterprise. So now here we are talking about the banks. So the ownership and the control and the regulation of the banking sector, you can say, is going to be transferred in the hand of the some private entity, the government control being the minimum one. Why? Because as we just discussed that the control and regulation is already transferred in the hand of the private sector, so that's why the government control are now the minimum one. Besides, the privatization also implies that the means of the production and the distribution are under the private ownership. Here they are talking about the privatization as a whole. They are not talking about the privatization of a bank. Clear? So that's why this sentence is in general, that privatization it implies that the means of the productions and distributions are must be under the private ownership. As we discussed that the economy development is going to be measured by the one of the measure is GDP, gross domestic production. So here they want to say that production and the distribution must be in the hand of the private ownership, and the decision relating to that production and distribution must also be taken by the private sector. Clear? So this is the meaning of privatization. But of course this all thing is done by the private sector, even though the overall regulation must be in the hand of the states. Clear? Whether you are the private entity, whether you are the private organization, so you can run the business by your own regulation, by your own rules. Clear? No control is there. But if any situation arises, then ultimate authority is in the hand of the government. The best example of this sentence is the situation of nowadays, that nowadays all the decisions relating to the banking policies are taken by the RBI. Clear? Even the private banks are there, they are not free to determine the things by their own. Clear? Why? Because some of the critical situation is there in the economy, so some of the major decisions related to the consumers are taken by the RBI, and RBI means the governor of the RBI, and of course all the private banks also has to follow that decisions. Clear? So ultimately, whether you are the private bank or whether you are the private institutions, here you can run your business by your ownership, by your control and regulation, but if in case of in the adverse situation, the ultimate decisions are in the hand of the state, or you can say in the hand of the government. So this is the simplest meaning of the privatization. Clear? Just starting three lines are the main one, that privatization means transferring the ownership, control and the regulation of the different sectors of the economy in the hands of the private sector or the private enterprise. Clear? I hope this is clear to you all. Okay, now moving ahead, the next topic is about the privatization in banking sector. Clear? In this definition, we have learned the meaning of privatization as a whole. Clear? This meaning is not according to the banking sector, as I already said that meaning is given in general. But here, the especially we are going to discuss about the privatization of banking sector. As you can see on the screen, that this question is asked so many times in the examination, whether for 7 marks or as a short note. So you can see this is the IMP one. I'm reading the first point, that privatization in banking sector means increasing ownership, management and control of the banking sector by the individual and by the private incorporated bodies. Clear? The same thing is written here, just we have discussed here. The same starting three lines are the written here, but these lines are written according to the banking's point of view. So the same thing is written, that if any banking sector is operated by any individual or the private bodies, so that banking sector is known as the privatized banking sector. Clear? The second point I am going to read, that privatization of the banks can be achieved in any of the following means. Clear? So some of the examples are given about the by using these things or by doing these activities, you can convert the any bank into the private bank. Clear? So the some of the ways you can see, some of the methods of the privatization of banks are given. The first method is about the denationalization. In the second chapter, we have discussed about the nationalized bank. Clear? And we have also learned the limitations of the nationalized bank. So if any nationalized bank is going to be denationalized, so you can say this is the conversion of public sector bank into the private one. Clear? So this is the way of the privatization of the banks. Again, I am repeating, by demonetization means what? If any nationalized bank is going to be converted into the private bank, or if it is going to be go into the procedure of denationalization, so that is known as the privatization of a bank. The second is by abstaining the from new ownership by the government. Clear? Sometimes it happens that the government ownership are going to be reduced by the government ownership are the changes in the terms and conditions, and the government ownership is the changes in the ownership of any private entity. So that abstaining of the new ownership and the removing the ownership of the government is another way of the privatization of the bank. The third way is by allowing the entry of the new private sectors bank. Of course, yes, the banks nowadays, as we discussed, that the healthy competition is good for any economic sector. Clear? So to increase the competition's level in the banking sector also, the entry of the new private banks are now much more easier comparison to the past time, or comparison to the pre-privatization period or the pre-nationalization period. Clear? Before that period, the private sector has to go for a lengthy procedure, and it is found difficult to start the private sector bank in the economy. But as according to the limitations, the study which is made by the Narsimhan committee, that committee has given the report that there is so many limitations of the public sector bank, and because of those limitations, if the government wants to remove those types of limitations, so it is necessary that the private sector entry must be allowed in the banking sector. And the last point is about the disinvestment of the public sector banks by the government. Clear? When anyone can become the owner by the investment in the equity shares. Clear? With as comparison to the all sectors, the banks are also having the shares. Clear? If anyone wants to become the owner, then of course they have to purchase the shares. If more than 51% of the shares is purchased by the government sector, then the government become the owner. And by here, one of the method is given about the you can say the denationalization is that the investment of the government should be reduced. Investment in what? Investment in the equity share of the uh, bank, investment in the equity share of the banks, because here we are talking about the bank. So if the investment is going to be reduced, so this process is known as the disinvestment. Again, I'm repeating, if investment of the government sector is going to be reduced, so that process is known as the disinvestment. Also, the disinvestment in the public sector bank by the government is one more method that can be adopted to convert the public sector bank into the private one. Clear? So this, here we have discussed the four methods of conversion of a public sector bank into the private one, or you can say these are the methods of the privatization of the banks. After that, we are going to discuss about the RBI guidelines about private sector banks. These guidelines were given in the year of 1993. Again, about repeating what we did, we have discussed the meaning of the privatization as a whole. Then we have discussed the privatization in the banking sector. In that starting, we have discussed the meaning, and afterwards we have discussed the methods of the privatization of the banks. Clear? So these two topics are over. Now the next one is about the RBI guidelines which are given about the private sector banks. Clear? In the year of 1993, so many guidelines are given by the RBI, and relating to the private sector banks guideline, we are going to discuss as a part of our syllabus. Again, as you can see on the screen, that this question is also asked so many times in the examination, but this question is not going to be asked as a whole. As per my analysis, they are going to ask you the sub points. Like they here, the one of the sub points is about the establishment of the private banks. So what they are going to ask you in the examination, they will ask you about explain the guidelines of the RBI about the establishment of the private sector banks. So in this manner, they are going to ask you the some of the questions. Clear? In the in your examinations. But before discussing that, I want to discuss some of the general things with you. That what is the need of the privatization in the economy? Clear? So so many points are there. I'm just explaining two or three points for your better understanding level. I the question arises that what is the need of the privatization in the banking sector. The first thing is that if the privatization will be increased, then the it is going to be reduce the rigidity in the decision making process. Clear? In the, if it is a public sector bank, and if any decision is going to be taken, so this decision making process may be rigid one. Why? Because so many elements, whether it is external factor or whether it is internal factors, are going to be affect directly or indirectly, so to pertaining to the that decisions. So if the decision making process must be free according to the interest of the public, as we all know that banking are the you can say the service sector, and they are serving the public, general public. So if any decision is taken related to the public, so of course the decision must not be rigid. So to remove these types of limitation, the private sectors are become necessary. And the second is suppose certain requirements are there that the small bank can be fulfilled more easily and quickly comparison to the large public sector bank. For an example, like collection of savings from the small group, small you can say a small group of industries, or the providing the finance to the small units. Clear? Or you can say the residential units. So you this what I wants to say, that collection from the small people and granting the loan to the small people, this is the requirement of providing more more better banking services facilities to all. Why? Because in the rural areas they don't require the huge loan, and their saving is also not so big. So if the small amount is going to be collect and the small fund is going to be lent, so this activity can be done more betterly by the private sector banks comparison to the public sector banks. And of course, yes, by private sector banks should be allowed only if they are fulfilling the basic requirements. Clear? If they are so big in nature, so of course they should not be allowed. But this is a recommendation which is given by the Narsiman committee. But nowadays we can see that big private sector banks is also allowed by the government. So these are some of the needs. With that, because of that needs, the privatization becomes necessary. Clear? And now we are going to discuss about the RBI guidelines that is given by the RBI for the private banks. Clear? And these guidelines are based on the Narsiman committee's analysis, that according to the PV Narsiman committee, RBI in the year of 1993, in the month of January, has provided some of the guidelines which are related to the establishment of the new private sector banks. And now we are going to discuss that one. So focus on the topic, that establishment of private sector bank. The first point is guidelines for the establishment of the capital of private sector banks. So first guideline is about the capital of the private sector bank. So first point, or the first sub point, is private banks will have to set up as a public limited bank and get themselves registered under the Indian Companies Act. So first thing, that just I am not reading the sentence, focus on my words, that private sector bank must be you can say registered under the Companies Act 1956. Second thing, the private sector banks must be registered under the Reserve Bank of India Act 1934, that we are going to discuss in second point. And the third, they think that they are also must be registered under the Banking Regulation Act 1949. So if it is a private sector bank, so it must be registered under this three act. I am repeating again, if you want to note down, so you can note this sentence. First thing, the private sector bank must be registered under, first, the Companies Act 1956. Second, the Reserve Bank of India Act 1934. And the third is the Banking Regulation Act 1949. Under these three act, the private sector bank must be registered. Clear? And the second point is written on the screen, that the Reserve Bank would give license to the private sector banks on the merits basis. Clear? Means on the, you can say, on the qualities of the private sector banks. This is not according to the, you can say, reference point of view. If they are capable, if the owners are capable, then only the license must be given. So according to the merit basis, the license must be given. Second thing, what they wants to say, that all the private sector banks must be licensed if only they are going to be registered themselves under the second schedule of RBI Act 1934. Means now all the private sector bank must be the scheduled bank. Clear? You cannot found in the market mostly the non-scheduled bank. Clear? The number of, as we discussed in the first chapter, that the number of non-scheduled bank is going to be reduced. Why? Because some of the merger, some of the loss making banks, and some of the conversion into the private sector banks. Now you can see that even all the private sector banks are scheduled bank. Why? Because they all are registered under the second schedule of RBI. That's why just we discussed that even they are the private sector bank, they can run the business by their own, according to the own rules and regulations. Even the final decision making authority is in the hand of the RBI. Why? Because they all are the scheduled bank, and on the scheduled bank, the RBI is having the authority. So even they are the private sector bank, they are working under the RBI, and there are certain rules and regulations of the RBI, guidelines of the RBI must be followed by them. I hope it is clear. First point is about the registration, that private sector bank must be registered under the three act. Clear? In the here only one act is written, and I have explained about the three act. On the second paragraph, the second act is written. Second and third act is written on the second paragraph. First act is written on the first point. So in spite of bifurcation of this act, if you remember these things, that private sector bank must be registered under three act, so it will be better to you to learn. First act is the Indian Companies Act 1956. written on the first sub point, and the second act is the Banking Regulation Act 1949, and the third act is the Reserve Bank of India Act 1934. Clear? So three act is there, so just remember this act and try to remember the year also. This is the IMP point. From the examination point of view, this question is asked so many times, so here you have to learn these things. Why? Because this is all about the guidelines, and in the guidelines nothing more about the explanation. These are the terms and conditions, and you have to explain, you have to write is at is it. Clear? You cannot modify it by your own. The next is about the voting rights. First point is about the registration. Second point is about the registration in the second schedule of RBI, and the third point is about the voting right. Clear? What is the voting right of the individual shareholders of the private sector banks? So here what they have written, that the voting rights of the individual shareholder shall be as stipulated in the Banking Regulation Act 1949. Means the rules regarding the voting rights are given under the Banking Regulation Act 1949. Initially, the ceiling on the voting right of an individual shareholders were subject to 1% of the total voting rights. Means the ceiling means the maximum limit. Clear? The maximum limit of the voting right of an individual shareholders are must be 1% of the total voting rights. Suppose there are total voting rights are 100, so the individual is having the only one voting right. Clear? So out of the total voting rights, the individual shareholder is having the 1% of the voting right. But nowadays the this rate is changed, and as the amendment was done in the year of February 1994. This rule is according to the 1993, but the amendment is made in the year of February 1994, that now this voting rights is increased, and this the ceiling of the voting rights for the individual shareholders is now allowed in the private bank from 1% to the 10%, depends on the terms and condition decided by the private sector banks, but the maximum limit can be 1% to the 10%. What we are talking about? We are talking about the voting right of an individual shareholders. Again I am repeating, we are talking about the voting right of individual shareholders in the private sector bank. The maximum right the individual shareholder is having is 1%, according to the regulation of 1993, but there is a modified one in the year of 1994. So now the maximum limit is 1% to the 10%. The individual shareholder can vote in any decisions from 1% to the 10%. It depends on the terms and condition of the banks. They are free to decide this terms and condition, but the maximum limit is 10%. The next point is about the management setup, that in the management setup, the liquidity requirement and other related material shall be subject to the provision of Reserve Bank of India Act 1934 and the Banking Regulation Act 1949. Of course, yes, if any bank is a scheduled bank, as we just discussed here in the second point, that all the private sector bank must be the scheduled one, then only they can got the license. Otherwise, the bank RBI will not provide the license. So here, if any bank is the scheduled bank, then of course for going the liquidity, what do you mean by liquidity? You can say liquidity requirements must means the maintaining the cash firm with the banks. For that limitations, all the banks have to follow the guidelines which is given under this acts, and of course you can say in short that they have to follow the guidelines which is given by the government. So as you know that liquidity requirement, the common example is about the CRR ratio, cash reserve ratio, and your SLR ratio, statutory liquidity ratio. That ratios are decided by the government. Clear? And the private sector banks has to follow this ratio. These ratios are not decided by the bank, and but of course yes, this requirement, this is known as the liquidity requirement. Clear? The best example is SLR and CRR. So these requirements are must be followed by the all the private sector banks, which is decided by the government, or you can say this is the subject to the provision of Reserve Bank of India Act. And what is written in the act? Of course, in the act it is written that they have to follow the current guideline which is given by the government. This is written in the act. So indirectly they want to say that for the liquidity requirements, all the banks has to follow the guidelines of the government. And the Third point is the private sector bank shall has to strictly adhere to the new norms of the income recognition, asset classification, and the capital adequacy ratio at extra. Now again, this is the modified one. This definition is not, this rule is not given in the 1993. After the amendment, this rule is added on that all the private sector banks has to strictly follow the new norms, means the new regulations which is given by the government. And as you know that now the income recognition is changed. Income recognition means what? The category that you can bifurcate any institution into the small one, medium one, or the macro one. Clear? So these classification rules are changed. And as you know that nowadays pandemic situation, nowadays this recognition is also changed because of the pandemic situation. The financing, the lending activity is changed, and they have also changed the definition of this income recognition. So day by day the definition is going to be changed. So the private sector bank has to follow the current definition which is given by the government. Second is about the assets classification and the capital adequacy ratio. What do you mean by this ratio? We have explained so many times that out of the risk factor assets, certain percentage of the capital must be there in the banking business. Clear? Risk weightage assets means the what do you mean by this? Risk weightage assets means the risk level in every lending activity is different. The loan which is granted in the agricultural sector, there the risk factor will be different. The loan which is granted in the industrial sector, risk factor will be different there. And the loan granted for any individual for startup a business, there the lending, there the risk factor will be different. If the loan granted for the marriage of children, so in that situation the risk level is different. So the risk level is different in every types of lending. So the weightage is given to the risk. Clear? And according to the finalized risk weightage assets, the loan is the assets for the bank, and risk, according to the risk weightage assets, certain percentage of the capital must be with the bank, then only the bank can survive in the market. So this is certain ratio that is given by the bank. The you can say the best is 8 to 9 percentage. Minimum 8 to 9 percentage bank must be having as a capital adequacy ratio. Yeah, the banks can be have more, but it should not be less than the 8 to 9 percentage. So these are the guidelines which is given by the government, and the private sector bank also has to follow these guidelines. And the last one is that this bank shall be permitted to open the branches consisting with the policy of the Reserve Bank in the directions. Clear? If you want to open the branches, of course you have to follow the guidelines of the RBI. But nowadays if you want to start any branches, so the rules and regulations are so simple. Clear? Yes, of course, if you want to start any new bank, clear, first time, then of course the certain lengthy rules and regulations are there. But to start up the branches, the rules are now simpler one. And the last one is about the private sector bank shall pay the due attention to provide the efficient and affordable customer services to its client by adopting the latest and updated technologies. Clear? As you all know that nowadays all the banking are based on the technologies, and the private sector banks has to focus on the private providing the best services and at a affordable rate to the customer. Likewise, they shall not be they shall also set up the consumer grievance redressal cell. As you all we have discussed that a particular cell is started to listen about the complaints. Grievance means the complaints. Clear? To listen about the complaints of the customer and to solve that type of complaint, a special cell was started. And also there is a facility of banking ombudsman scheme. You might heard the you advertise on the television also. There is an advertisement also about the consumer awareness, that if a bank are not satisfying your complaints, you are not satisfied with the decision which is taken by the banks, so you can register your complaints with the BO, that is called banking ombudsman. You can register your complaint online also. So these all are the facilities, or the you can say techniques, to satisfy the customer at a best level. First thing, provide the services at a affordable rates. And the second thing, listen the complaints very carefully. So if these two things are satisfied by the private sector banks, why? Because this is the guidelines given by the government. So with this we have completed with the topic. The second point is about the capital of the private bank, that we are going to discuss in the next lecture. Clear? What we did, we have explained about the establishment of the private sector bank. If you want to establish the private sector bank, first thing about the establishment. Clear? If you want to establish the private sector banks, so these are the certain rules and regulations. In the next lecture we are going to discuss about the capital requirement of the private sector bank. I hope it is clear. This is the subtopics of the RBI guidelines. Clear. First topic is we have completed about the establishment. I hope it is understood to you. So what we did in the today's lecture, I just want to brief out in short that we have started the private bank, and in that we have discussed the definition of privatization as a whole. After that we have discussed the privatization in the banking sector. In that we have discussed the meaning of the privatization of the banking sector, and we have discussed some of the modes of the privatization of banks. After that we have started with the topic that is the RBI guidelines about the private sector banks. In that we have discussed the first point, that is establishment of the private sector bank. If you want to establish any private bank, then what are the guidelines that is given by the RBI? So we have discussed about these guidelines, and in the next lecture we are going to discuss about the capital of the private sector bank. Now till we are going to meet in the next lecture. Till then, stay home, stay safe, stay connected, start reading. Have a good day. Thank you.